Good morning. Good morning, everybody. Good morning, everybody. Good morning, guys. Feels like my dad just left me. I'm here. We're good. Let's see what the market brings today. We have a lot of news coming out at 10 a.m. So far, this was a pretty bad bull trap. 398 is major support. So what they ended up doing was they broke it down lower. Let's see if this would be a reason to go long. NASDAQ 296.75, major resistance. All of the moving averages on the NASDAQ are coinciding with 296.75. Oof, we wicked above 296.75 on the NASDAQ. We basically wicked right to VWAP on the SPY. And reversed right back down. SPY is relatively the weakest. The IWM is still holding above 186.20. The NASDAQ still technically holding above 296.50-ish. I'm in light SPY calls 398.20 stop. Okay, this If we get a close below 398.20, then I'm just gonna sell out. Yeah, I'm selling. IWM new low of day. NASDAQ new low of day. Things are holding support. Chopping it around. So that was a major, that was a good opportunity for people to go short. And then they ripped it right back up. Where we went long was a good opportunity to go long. So they're chopping it around at the moment. We have to take light spy calls again. 398.20 stop once more. I'm gonna have a 0.93 stop. .93 stop. So if it falls below 0.93, then I'm out. Talking about the contracts. I sold some. It's very, very choppy, disgusting, slow price action. Usually this movement should have broken up above, but they're keeping the market down. Not letting it fly. We got some closes above VWAP on the SPY. The IWM is holding above the 50 SMA, but the NASDAQ is very weak. It's holding below the 10 SMA. And the 50 SMA, all of the VWAP on NASDAQ is at 296.60. I have a stop loss at 0.99 for the rest. And if that doesn't hold, then it is what it is. We'll look for another opportunity. But so far, that was an explosive opportunity for the market to rip it up, but we did not. So on days like that, on days like this, we don't want to just marry a position. Not every day is going to be super fluid. Let's see if this candle here would be a bull trap, because 398.20 once again is the level that bulls want to hold. So technically we basically are holding above that level. The SPY closed above VWAP once more. The NASDAQ is holding above support. Everything is holding support, so we just need to see if bulls want that level to remain. Yep. Choppiness. It's like we'll get some sort of fluidity after 10 a.m. NASDAQ ripped below 296.10, wicked, and is now trading back above 296.14. The IWM is retesting the recent high. Let's see. They're just trying their best not to let it fly. This setup usually it would have ripped above high of day already. That's why we took it. So if you haven't taken any profit, this is a good little opportunity to take some profit. Now, a setup like this, right? Clear bullish move. For them to rip it down now is going to be very, very like choppy, basically. Because on paper, this is a very, very bullish move. But now, can people going long now? The people that are going long now are late bulls. So can late bulls and the bulls that were bullish initially when we were also bullish. Can all of that bullish pressure continue the market up? That is the question. That is the $1,000,000 question. IWM is trading at 200 SMA is acting as resistance on the IWM. We got to close above the 10 SMA on the NASDAQ. The NASDAQ was the weakest. So let's see if the strength in the NASDAQ can help push the SPY up. And then also, guys, remember we have news coming out at 10 a.m. So I don't want to hold anything. So hopefully an explosion could happen for 2 minutes and 30 seconds. Talk to me nice. Oof, beautiful, nice. Thank God. Oh man, I would have just been like, what a waste of a setup. Why would they not rip it up? Beautiful. Good job. Good job, MMs. You lot deserve some McDonald's today. Beautiful. Almost 25%. Nice. The NASDAQ got a nice solid close above VWAP and all of the moving averages and everything as well. 296.75 is major resistance on the NASDAQ. 187 is major resistance on the IWM. Okay, so make sure you guys are not holding anything before this minute ends. Make sure you guys are out of everything, because at 10 a.m. news comes out, and if you're holding anything through news, it's a complete gamble. So just please keep that in mind. Sorry, not news. Powell's speech. And job openings. Gotta readjust our screens for that one. Oof. Oof.
Legislative.
Call side contracts are moving really fast. So just contracts in general are moving very fast right now.
Within which to submit extraneous materials to the chair for inclusion in the record. Positive. But you know as well as I do, you're facing a very strong headwind from the political left. Democrats are pressuring the Fed to stray from its narrow mandate. It's a page out of their same old progressive playbook. When they don't have the votes to achieve something here in Congress, they turn to regulators. And now, Chair Powell, they're looking at you and the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess. I urge you to reject the ideologues who put their social agenda ahead of economic prosperity. High prices continue to eat away at workers' wages and retirees' incomes. Since President Biden took office, we've experienced inflation at rates not seen since the late 70s and early 80s. Inflation
Don't gamble. That's the main thing.
After Democrats
do not gamble on trying to catch every single move.
$2 trillion of inflationary fuel into the economy.
Just wait. All you have to do is just wait.
Consumer price index showed
Days like this, days where FOMC minutes come out, rate changes at 2 p.m. when like Powell speaks, on days like that, people gamble a lot. And that's how you lose a lot of money. You throw out all of the discipline, all of the trading ideas and everything that you had to try to make quick money, and then you end up losing it. So just, there's no point.
While inflation is now believed
just be patient.
Below its mid-2022 peak, it is persisting at rates well above the Fed's target. It remains broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say they are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also want to hear from you regarding some concerning developments at the Federal Reserve.
Technically, this would be a good opportunity to go along with a 398 stop. But with contracts moving that fast, with things just with the market like consolidating and condensing itself within this tight range, 398.30 is major resistance as well on the SPY.
Quantitative analysis the Fed is performing. The Fed shouldn't operate in the shadows, especially when
so for those reasons, like, they're making good technical long setups, but then they're deliberately playing around with people's premiums because the contracts are moving very fast, so they're going to take advantage of that.
Fed's holistic review, particularly when so many board members have stated that the banking system is very well capitalized, and any review the Fed needs to stick to its knitting. I agree. There is concern from many that the Fed is picking up new needles and knitting partisan sweaters. At such a precarious time for our economy here at home and the global economy, that would be a mistake. Thank you for being here today. I look forward to your testimony and the questions by our members. The chair now recognizes the ranking member of the committee, Ms. Waters, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. Good morning, Chair Powell.
This was another very strong move. Again, could go long.
President Biden has made major progress.
398.30, 398.20 as a stop.
Including adding a record 12 million jobs, reducing unemployment to its lowest rate in 54 years,
But
while also reducing
it's not worth
the
it.
deficit by $1.7 trillion. Unfortunately, many families are still struggling to afford basic necessities because of inflation. What's more, interest rate hikes are making borrowing, especially for mortgages, outrageously expensive. Since I raised this concern for you in a November letter, the rate hikes continue to have an outsized impact on housing costs, which are, as you know, a primary driver of core inflation. But, Mr. Chair, I think that you will agree that Congress also has a role. That's why I'm somewhat disappointed that after 2 months, Republicans have taken no serious action to address inflation. By this time last Congress, House Democrats had passed the American Rescue Plan to provide relief from the ongoing pandemic, which included our committee's efforts to provide $70 billion for homeowners, renters, businesses, and first responders. If Republicans are looking for ideas, committee Democrats have put forth additional bills, like the Build Back Better Act, to bring down costs for Americans, especially housing costs. Even more concerning, we're just months away from an economic catastrophe beyond what we have ever seen, including spiking interest rates, massive job losses, and global instability. I'm talking about the threats by Republican leadership to force a default on our nation's debt if we don't agree to their demands to cut Social Security, Medicare, or other critical programs. You've urged Congress to take immediate action to raise the debt ceiling. But rather than focusing on this very real issue, the first bill that committee Republicans brought to the floor instead suggested that Social Security and Medicare are socialist threats to America. Since then, we have considered legislation related to deregulating securities and banking laws and countering threats from China, but Republicans have completely ignored the biggest economic threat to businesses, consumers, and our economy, defaulting on our debt. Last month, I wrote a letter to Chair McHenry urging him to take this matter seriously and hold a hearing, but I'm still waiting for a response. I hope Republicans will listen today to the real consequences that even the mere threat of a default would have for everyone in this country. And finally, I'm so pleased that we're finally making progress on diversity and inclusion for key positions at the Fed, including last year's historic confirmation of Dr. Lisa Cook to serve as the very first Black woman on the Federal Reserve Board.
This would normally be a good short.
Vice Chair and Kansas City Fed President positions vacant. I think President Biden and Kansas City Fed Board should build on this progress by seriously considering diverse candidates for these positions. With that, I yield back the balance of my time.
The ranking member yields back the balance of my time, asking unanimous consent to submit for the record my letter to Secretary of the Treasury.
398.30 is major support, but
for an update on the X-date for the debt
the
ceiling.
bullish momentum,
I also ask unanimous
they should
consent
recapture it around 3. They should let it break below 398.30
on the unsustainability
and
of our
then
debt,
bounce it above 398.
recently released. And without objection,
That would make the most
I now
sense.
recognize the Chair of the Financial Institutions Subcommittee Chair, Mr. Barr, for 1 minute.
Thank you, Mr. Chairman. And Chairman Powell, thank you for being here today to discuss the Federal Reserve's monetary policy actions in a time of economic uncertainty, mixed economic data, historic inflation.
See, the contracts are moving much faster than normal, obviously, as well.
Businesses around the country. It is paramount that the Federal Reserve remain vigilant on reducing inflation, anchoring inflation expectations, and restoring price stability at the Fed's 2% target. I also look forward to discussing the Fed's regulatory and supervisory activities.
20%.
The Fed reviews the bank capital
Off of
framework.
nothing.
They
Off of nothing
consider
move.
the impact to the real economy and our global competitiveness when raising capital requirements and sidelining capital would work at cross purposes with monetary tightening, constraining the supply side when we need more, not less, investment to fix.
So they broke it below 398.30.
Tailored regulations
They should allow it to continue falling and bounce around 398. So if you guys went short, make sure you guys have taken profit. And we're not going to go long until we see some sort of bullishness.
Ranking member of the Financial Institutions Subcommittee, Mr. Fall. Sure, for 1 minute.
Thank you, and thank you, Chair Powell, for being here today. Today is the 15th anniversary of when I was first elected to Congress and placed on.
Who is this speaking right now? The guy sounds like a.
The economy was about to collapse.
Hire him to narrate a movie.
The emergency response to the
Well, it turns out back in my day, we had a.
that successfully stabilized our financial system.
What a voice.
So 15 years later, as I take my place as the ranking member
All right.
on the Committee of Oversight over U.S. banking and monetary policy, I recall the solemn oath that
I recall the solemn oath. I recall.
calamity never existed.
Who is this guy?
The monetary policy report that we're receiving today is largely a narrative of a return to normal. And lead times to manufacturers are back to pre-COVID levels. The job market retains supernatural strength, and inflation is responding more or less as predicted to the usual measures. And by far, the largest threat on the horizon is a repeat of the 2011 default crisis. Has the power to avoid that.
This is a very, very major moment for bulls if they want this to hold.
Today, we welcome the testimony of Jerome.
So if this is gonna bounce, it has to bounce. Above 398, like now. But if it doesn't, then these puts are gonna.
Chair Powell is appointed, reappointed.
Then we're going to like really, really capitulate down.
Term as chair on
So-
May 23rd, 2022. Chair Powell also serves
I don't
as
mind.
chairman of the Federal Open Markets Committee and the system's principal monetary policy making, which is the system's principal monetary policy making body. Chair Powell, we thank you for taking time to be here. We will recognize you for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made part of the record. Chairman Powell, you're recognized.
Chairman McHenry, Ranking Member Waters.
He's about to speak, so make sure you guys have taken profit and don't let it go red.
The opportunity to present the Federal Reserve's semi-annual monetary policy report. My colleagues and I are acutely aware that high inflation is causing significant hardship. and we're
398.50 is the level that we want this to remain below.
inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work
Crack
to
it.
do. Our policy actions are guided by our dual mandate to promote
Crack
maximum
it
employment
below.
and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability,
Sorry
we
for
will
the clap.
not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening.
Make sure you guys are taking profit. Please, please make sure now you guys are taking profit. This is very overextended to the downside. They could just bounce it. Just for the sake of bouncing it, they could bring it back up to 398.20.
The breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than.
The only way to go long right now is if there's some strength. We didn't see strength. We didn't want to go. I didn't want to go long at 398 just for the hope of, oh, you know, support level. Let's just go long at the support. No, you have to play alongside the momentum.
12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January. As energy prices have declined and supply chain bottlenecks have eased somewhat in recent months. they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year.
Still too early to go long. Don't take the risk. It's not worth it. Right now, the pops, you can argue that they would just be shorting opportunities.
Other recent indicators point to subdued growth of spending and production.
The IWM is still
The housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. Activity in the housing sector continues to weaken, largely reflecting higher...
Talk your crap! Oh my god, pal, I love you. Yes. Yes.
Despite the slowdown in the labor market remains extremely tight.
Pal, you're the man, brother. You're the man, pal.
1969. Job gains remain very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy.
All right, this shot up 50%. I hope you guys took more profit, and now I'm just letting runners ride.
The FOMC has continued to tighten the stance.
Hold on. I haven't asked for ones in a long time. If you guys made money today, I need to see a bunch of ones in the chat. This is like, I called basically every movement so far perfectly. During the speech, up again, down, and then we took the shorts. So if you guys made money, I need to see a bunch. I need to see way more ones than that, man. Way more ones than that. Way more ones, man. This is... Nah. There's hundreds of you guys here. I need to see ones in the chat, man. Love you guys, man. I love you guys, man. What a blessing. Perfect. Let's get it. All right. Job is not finished. Job is not finished. Let's see what else. See what else we got.
As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
Every single time I sell, it just does the opposite. So, oh my God.
Indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes.
It's crazy.
Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation.
We're too late. There's no reason to try to go long right now.
We will stay the course.
Just wait.
To conclude, actions affect
We have a March meeting coming up. Open market. Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which of course I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy.
You should be in puts again.
Bringing inflation down. We'll be carefully analyzing them. Again, we have.
But I want to see if this holds as a resistance. If he wasn't speaking, I would be in freaking puts right now.
Not made any decision about the March meeting. We're not going to do that until we see the additional data. The point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher long. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that
Put premiums are put premiums are being ripped apart right now with little baby moves up.
we'd expected.
And what are those economic factors?
So going back to
This is like a very risky trade to go short,
as I mentioned,
but
the
it's such a beautiful trade.
after inflation readings of November and December were revised up. We got a very strong inflation report for January. We got it.
Contracts just are like flying with little baby moves to the downside. That's
Extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out, some of that may have been affected by the very warm January weather, but nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put out a policy statement noting that digital asset custody is a permissible activity in a safe and sound manner.
holy crap.
However, if a bank can
20% on that small freaking move, man. That is ridiculous.
safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks
Oh
from
my
offering
God.
digital
Disgusting.
asset custody service at any
Disgusting.
scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bill. This is SAB 121, I think, and
That's right.
certainly aware of it. And we do follow general accepted accounting principles in our
Yes.
capital regulation.
Okay, well, without objection, I'll submit to the, submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process, and previous statements by members of the Fed governors about the adequacy of
Going along here right now is a disastrous long opportunity.
and so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff, is that done at the
IWM wicked lower and is trying to close above 187.11.
the Fed to conduct a holistic review and what that process
We're only going to
is.
go long if they rip it up.
So, my general question is, do you still agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of?
Thank you. So the why really just is that
It's happening too quick.
the new Vice Chair for Supervision, Vice Chair.
It's happening too
has-
quick.
Has launched into, he's taking a fresh look at everything, including capital. That actually is typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership with input from the staff and discussions with governors on that committee. And I'm kept broadly apprised about what's going on, but the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal, and that proposal will go out for comment, and we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
Thank you. I yield back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week they may
399.50 is major resistance.
the U.S. debt based on the escalating
Oh my
brinksmanship.
god, I'm nasty at this, man. Oh my goodness.
If Congress
Disgusting.
ultimately addresses the debt limit at the last minute. This is Standard & Poor's downgraded our debt back in 2011 when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective,
What a blessing. Yeah, man, and I'm blessed to be able to do this stuff here with you guys. Thank you guys for believing in me and spending your time and your mornings with me here. Like, this is like, it's a blessing, and it means the world to me.
Hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office.
This is ridiculous.
3 times they addressed the debt ceiling in a timely manner without holding our hands hostage. But Republicans now are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start.
You know what's crazy is normally 399.20 holds, and this continues ripping up higher.
Really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from you know, the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Thank you very much. I don't want to miss what you said.
All right.
I somewhat quoted you when you said that Congress must raise the debt limit because of what you described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again,
oh my God.
These are fiscal discussions, and we don't want to be a part of them, and really they're between, you know, elected officials.
But you are an expert on the subject.
Well, I spent a lot of time on this, as you'll recall.
As an expert on this subject, you are concerned about the high risky consequence of failing to do so. Is that correct? Did I correctly quote you?
That's correct.
Thank you. And so, again, let me just go a little bit further.
It's difficult to be long here.
The chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted.
There's too explosive of a move pending here. 399.20 is holding us support, but we're failing to break above resistance. So it's not as clean to be long.
Until about June. Is that your
It's safer to be short. Does that make sense?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
I don't, honestly. That's not for me to say. These are really questions for the Secretary. I'm sorry, Ms. White.
Have you had any conversation with her about the statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account, et cetera? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get you
Gentlelady's
in a-
time is expired.
I beg your pardon?
The gentlelady's time is expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us. You're welcome anytime. Don't wait till we ask. If you want to volunteer and come, we love having your views on many topics. Thank you for the environment and making sure that that's right. So your commitment to price stability is welcome by this committee. Yesterday in the Senate, you suggested that you supported a regulatory framework, a broadly regulatory framework for digital assets. Is that right?
Yes.
And is it your view that if we had a regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business, and tokenized payments, again, that would be beneficial to business to know how to go about that.
Yes,
Wait, well, I'm
sure,
north.
sound manner, we're talking about banks.
Right. And then my next point would be exactly that, to help banks, investment brokers, custodians understand how they could even participate in that market in a safe and sound manner. You agree that a regulatory framework would help on that?
Yes.
And then finally, we've grown up.
399.50 is the line in the sand.
A dual banking system, and due to a quirk here in Congress over 100 years ago, we have
It makes more sense to
exclusively by the
be
state.
bearish right now. The upward momentum
Would you
shifted.
believe that regulatory framework would also have to preserve some sort of role, subject to safety and soundness, for states to play some role in that regulatory framework for digital assets?
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right.
bearish.
Since 1912, engaged the Federal Reserve as their fiscal
Once again, it would
agent.
make sense for them to rip it lower and then bounce it from a lower point. But
You've testified here many times before that
let's see what they do.
central bank digital currency, that would have to be authorized by statute by Congress. Is that still your testimony?
So that is absolutely the case as it relates to a retail CBDC. There are potential forms of a wholesale CBDC that we need to look at. It's less clear. But we've always been talking about retail CBDC, and that's something we would certainly need congressional approval for.
And what would be a parameter on something that's not a retail CBDC where you think that could be issued in some form or fashion without Congress's direct statutory authorization?
It would be, for example, it would just be something between banks, so it would look an awful lot like a bank reserve. And you might ask, well, why would we need it? And that's a really good question too.
Yeah.
But just something literally within a wholesale market.
But that speaks to you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside the yeah.
Yes.
So that leads me to FedNow, which is supposed to be up and running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have this full committee briefed on that. By the Federal Reserve. I know the chair of the Kansas
How about now? Does that work?
Bank was involved. She's now left, and I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out, and also just a question that we've been asked that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
I'm not sure why we're not 24/7 on that, and of course, be delighted to come up and brief the committee on FedNow.
That'd be good. We'll take you up on that, and the right person from the Fed, and Mr.
You guys hear me?
Chairman, I'll yield back.
Gentleman yields back. We'll now recognize the the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance of tough legacy LIBOR, some $16 trillion of instruments where the creditor wouldn't know how much the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're done, and we've solved the LIBOR issue. Is that correct?
Can you guys hear me now? Any help? They're still
People talk
out on
about
YouTube.
inflation, and they somehow say that it's a matter of the personalities and politics in the United States.
Yeah, on
Argue that the
TikTok
entire
it
world is
works,
hit by
but
inflation because
it
Ukraine
doesn't
and
seem to be
COVID.
working on
I
Twitch for
think
some
we've
reason.
got the answer to this question, in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany. I commend the ranking member for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we have less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget plan tomorrow. And perhaps in their time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chair, we've talked back in 2001 and several times even before that about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is
Yeah, YouTube is very, very delayed.
Be tricked into wiring their down payment.
Yeah, YouTube
to
is
the wrong
very
account.
delayed. That's the issue.
Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get
Thank God.
back to me as to how you're going to make sure that an email from a Nigerian prince does not get the wired funds, particularly in a housing transaction, wired to an account number that turns out to be in Lagos. What progress do you have? When can home buyers have a system where they're sending it to a named payee as well as to a number?
So I hope we did come back in a timely way to you on that. But it's a problem you've brought to our attention, you're right, over many years. And we continue to focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved, nor are you aware of any solution. I would hope that you would go back and say, we don't want to add this anxiety to every real estate transaction. We go back to the drawing boards, follow what the Brits have done, and have payee matching. Finally, as to crypto, cryptocurrency says what it means: hidden money. That's what it means. And if we impose know your customer and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's time's expired. I will now go to the gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Chairman McHenry, thank you very much. Chairman Powell, thank you for joining us today. We appreciate not only your professionalism, but your direction at us. Chairman Powell, I know that the Fed considers divergences, and you talked about it as you spoke in your opening statement about consumer price index, personal consumer expenditures, inflation, GDP, and all these things are talked about in your report, monetary report. March 3, 2023. Thank you. A couple days ago, I had an opportunity to see that an economist, Art Laffer, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix. But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have
Last
missed?
trade, SPY calls
And
0.65 stop.
to
This
a
is the
person
riskiest
who
trade.
follows this as
I was also short,
50 years,
but now this is like the riskiest trade.
is an important
Looking for
way
a
to
bounce.
look at efficiencies in healthcare. Thank you.
So no, that's not in our monetary policy report. I'll just say one thing, and that is we do
Quick and stupid moves.
spend something like 17 or 18 in that range percent of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system. It's not that the benefit.
NASDAQ 296.75, a major resistance. VWAP is acting as major resistance on the SPY as well. Coincides with the 200 SMA.
$1 a year that we spend and get nothing for it.
Contracts are up 10%. You guys could take profit, and now basically as long as this remains above 398.30,
If we had a delivery
this is going to continue up.
that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy.
NASDAQ is trading above 296.75. The IWM is holding above 187. SPY is breaking above VWAP. 15% now.
Because it in fact is an inhibitor or an accelerator.
Just explode.
as
Just
we
explode up.
gain that advantage.
Just explode up.
You just talked about
Make it easy
some
for us.
seemingly which would offer some validation.
And of course, obviously now stop loss is going to be at break even.
About the huge
So,
importance of this. Is that something
yeah,
we should
let's see.
start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start looking at and start putting pressure on us to gain those efficiencies as a result of a global.
398.30 is a major support that
Supply
late
chains
bulls
generally,
want
they
to hold,
have
basically.
Suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for, you know, the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in
NASDAQ continues to show strength. The IWM broke below the recent lows and wicked up. SPY broke above VWAP. We got to close above VWAP and the 200 SMA on the SPY.
My point is, it's such a staggering.
Let's see. Let's see if they could continue it up. The NASDAQ is the 10 SMA on the NASDAQ is slapped it down.
Access. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Someone yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Thank you very much, Chairman, and welcome back, Chairman Powell. Now, Chairman Powell, listen to me very carefully here, because I think we're on the verge of making a terrible mistake.
All right, I'm out.
Back in 2008, Barney Frank then and Miss Waters asked me to take a look and kind of work with you and the Fed. You were a board member in 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks, like Goldman Sachs, Citigroup, and our regional and smaller banks, like Truist and our community banks. And we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which seeks to apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them. And now we want to apply these rules to the regional banks. There's a big difference, and we've omitted this difference if you proceed in this manner. I think it's very misguided. It works, and you and I worked on this. You recall this. You were a board member, and we saw that we needed to have a better playing field to protect. And if you all go along with this, it could put many of our regional banks and small community banks out of business. So I want you to reverse this. First of all, tell me, am I speaking the truth? Are you all planning to all of a sudden here put these smaller and regional banks under the same heavy or financial load as your large worldwide banks? Tell me.
No, we're not planning that. We believe strongly and always have in tailoring to address the different
Things are starting to get a little choppy.
size and risk characteristics of financial institutions, and certainly nothing like that for the regionals. They won't have anything like what the what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember clearly you and I were back, I think we were on
Taking SPY calls 0.73 stop last trade.
about this in this same committee room. And you worked with us on that. I'm glad to hear that. Where's
Doesn't
that
work.
coming
Doesn't work.
from?
That's
I
life.
mean, it's a concern. It's just a rumor. Have there been any discussions about removing the playing field and the guardrails we have here, the differentiations in the
I'm gonna sell and just call it a day. I don't want to start over trading, but you guys can hold 0.73 as a stop. But I've got to leave, and I'm not gonna stick around
The law now, and we're doing this. Dodd-Frank actually,
because I'm just gonna end up trading.
suggested that we should tailor, and then
Should I stay?
S2155 then required it, and anything
Yeah,
that
no,
we do
I'm gonna call it a day.
will reflect.
Things are starting to get choppy.
so
But
we
this should work as well, most likely.
we're not
But yeah.
going to change and put the small
A good one. Get these guys real quick. Okay. Hope you guys had a good day. Sure, we had a good day. Sure, everyone made some money today. Love you guys. Take care. Have a good one. And yeah, man. I wish you guys heard as I was trying to go short, but it is what it is. But yeah, guys, love you guys. Take care. Don't overtrade today. Tomorrow morning shouldn't be that crazy. So tomorrow the only news that we have is pre-market, but then Friday morning we have lots of news coming out pre-market. So and immediately right now, as long as 398.30 can hold on the SPY, then this should continue up. All right, love you guys. Take care. Have a good one.